How's it going, everyone? In today's video, I'm going to be discussing the Asian session liquidity model, which is my preferred and favorite entry criteria when price is busy approaching a higher time frame supply or demand zone. Which also gives real good probability that price will run from that specific supply or demand zone after the Asian liquidity sweep model. To break this down in a more visual mind graph format, in the example of a downtrend where price is targeting the weak expectational lows, creating lower lows, supply busy in control, the high probability supply zones that will hold in London session is those zones that have swept Asia liquidity, mitigated areas of supply, prints your entry confirmation, which in my criteria is just a displacement fair value gap entry after the mitigation of Asian session into a higher time frame M15 supply or demand zone, to then look for shorts to target those relative weak exposed lows. In a bullish example, when price is busy creating higher highs, price respecting the demand that is in control, creating strong protected lows, the demand zones with really good probability that will continue to run in the expectational direction of order flow is those zones that sweep the Asian liquidity lows into that higher time frame demand zone and also give that displacement fair value gap entry to continue price in the direction to target those weak exposed highs. It's really a simple model to understand. There's nothing really technical to this. It's just an extra confluence to add to your supply and demand zone trading. The supply zones that hold the Asian session highs below them has good probability of price to sweep Asia, mitigate those supply zones and to continue in that direction, and vice versa with demand zone. The demand zones that hold the Asian lows above that specific demand zone has good probability that price will sweep Asian lows to mitigate demand and continue in that expectational direction. Let's have a look at one or two live examples and also a 27 risk to reward trade recap that I took on live stream with my Discord members based on the Asian session liquidity system. In order to be able to understand the Asian liquidity system, this still needs to be put in correlation with your higher time frame structural order flow and context of the market before just mechanically trading the Asian liquidity system. So what I'm going to do is in the first example over here, I'm going to top-down analysis Euro USD based on the three structure types, which is a methodology that I teach to my private members inside of the Discord. So I'm not going to go too into depth into explaining it, but I'm going to mark it out for you and explain it as we go along. So most recently on Euro USD, we've had a weekly break of structure to the downside, making this our weekly strong protected highs and making this our weekly weak exposed lows. So the expectational order flow after this weekly break of structure to the downside is to cater for a bit of a pullback. So if we have a look at structure, prices now, after the break of structure, created that internal break of structure to the downside, that pullback into demand to continue targeting those weak expectational highs. Price is now broken structure to the upside. We're in a bit of that daily pullback phase, making this our daily break of structure, our daily internal strong low, and our daily weak high. I say this as an internal strong low because your daily structure is your weekly internal structure. Also, we've had older areas of supply over here which created the overall weekly break of structure to the downside and the daily break of structure to the downside over here. So these areas act as old supply zones that can cater for the daily pullback. Now that price has mitigated the daily supply, expectational order flow is to continue with a bit of a pullback, mitigate demand to continue targeting those weak highs. If price fails these demand areas and creates this daily break of structure to the downside, we can expect a bit of a pullback into supply to eventually then continue to target those overall weekly weak lows and those new daily weak lows. As if this weak high creates this break of structure to the downside, this will then become a strong protected high, signaling that the weekly pullback is now over. Expectational order flow is to target these weak lows. All right, so from the daily, we can then hop over to the 4-hour time frame, which is our daily internal. Most recently on the 4-hour, we've had this 4-hour break of structure to the upside, so that can become our 4-hour boss. This becomes our 4-hour strong protected low, which is also our daily strong protected low, and our 4-hour weak exposed high. All right, as I've mentioned, after every break of structure, Whether that's swing, internal, or fractal, price will always incur some kind of pullback phase. In this scenario, we had that 4-hour break of structure to the upside, that mitigation into the older daily supply, which then is starting to cater for that 4-hour pullback, which we look to fulfill areas of demand before continuing to target those expectational weak highs. Okay, so price has now mitigated this area of 4-hour demand. And this is one thing I want you to take notes of, and this is all going to add together to understanding the Asian liquidity system. In order for a demand or supply to be valid, we need to have these 4 following criteria. Number 1, the demand or supply zone must create a fair value gap or imbalance push. Number 2, the demand or supply zone must have a liquidity build-up. And this is where the Asian liquidity system is going to come in handy. The Asian range, LQ, makes a supply or demand zone really valuable. And number 3, that supply or demand zone must create a break of structure or a change of character. And finally, number 4, that S&D zone must be unmitigated, meaning price must not have already pulled back and tapped into that zone. For example, this zone was mitigated today, and over here we have a further down, more extreme, unmitigated zone that has created the fair value gap, which we call an inefficient or imbalance push, the break of structure to the upside, and the overall 4-hour break of structure to the upside. So this would be a 4-hour internal break of structure. And we do have resting liquidity below the zone. So we have valid liquidity to potentially sweep into the zone and continue a reaction from there. So going back to our Euro USD markup, we've now marked up the 4-hour. We also understand that price is now mitigated, discounted areas of pricing and demand in that discount areas of pricing, which was discussed in a previous video in this public YouTube ICT MMFunded mentorship. So from the 4-hour, we then hop onto the M15. All right, so just to break that down mechanically, from the weekly, we go to the daily. The daily is our weekly internal structure. From the daily, we go to the 4-hour. The 4-hour is our daily internal structure. From the 4-hour, we head over to the M15. I've just opened up the Euro USD chart on 8cap, which is the feed that I use because it's the same as the prop firm that I use, and all of the analysis that I've marked up for my members this morning and throughout the past couple of months. All right, so again, have a looking at the same 4-hour chart, 4-hour break of structure to the upside, 4-hour strong lows, our 4-hour weak highs, which is also our M15 weak highs. We had mitigation into that daily supply, catering for that 4-hour pullback. So if we had to break down price at the moment, 4-hour swing is currently bullish, catering for that daily pullback that we discussed now. We've had a strong reaction from the daily supply. Our daily lows, overall lows over here, are weak daily lows. So the longer term eventual expectational order flow is to target these weak lows. Our 4-hour and M15 is both currently bullish. Price has mitigated the 4-hour discounted demand, which again, if we take our premium and discount from that 4-hour low to the 4-hour high, we have equilibrium, premium, and discount. We've now mitigated discount. So the eventual expectational order flow from here is to target these 4-hour weak highs. But this is where we need to keep in mind, if the daily swing pullback phase is finished after mitigating the daily supply, then the 4-hour and the M15 will shift bearish, and the expectational order flow then is to continue targeting these daily weak lows. So as price lies at the moment, which is also what I discussed with my members, price can either go either way from here. So I'm looking to wait for a bit more development, but I'll take you into what I saw this morning and also the Asian liquidity system trade that I took yesterday. So going into session yesterday, price at the moment was over here on these two candles. As we were coming into, price was on this candle over here at about 7:30 in the morning at GMT +2 when I was doing my markup for my community. Understanding structure and our order flow, our M15 was bullish. We just had that M15 break of structure, that pullback into M15 demand. So the expectation was to continue targeting these M15 week highs. Our 4-hour structure was bullish, understanding we've had this 4-hour break of structure to the upside, this 4-hour pullback mitigation into demand. So all of this was in line with the higher time frame intention to continue targeting these week highs. And also understanding all of that all of this is a part of a daily pullback phase. And we know that price is due for more of that daily pullback. All right, so once we understand the daily pullback phase, 4-hour structures bullish, catering for the daily pullback phase. M15 was also bullish, understanding that the 4-hour is bullish, which is our 4-hour internal structure, all of the structure that happens in between our 4-hour swing ranges. From the 15 minutes, if we hop down onto the M15, enabling my Asian session range, which I've got set to 2 o'clock EST to 6 o'clock EST, which I think is 1 o'clock GMT plus 2 to 5 o'clock GMT plus 2, which is the Asian session range. I marked out a valid wick zone, demand zone, which again is discussed with my private members, and how to actually mark out your supply and demand zones with your 4 criteria. Okay, so what I was busy looking for going into session this day, from the 15 minutes, I now have my valid POI. I'm looking for longs off of demand to continue with the structural order flow to continue targeting those weak highs. From the 15 minutes, we can then hop over straight to the 1 minute. 1 minute and 5 minutes is purely for entry confirmations. We don't look at structure, we don't look at supply or demand on the M1 or the M5. All right, Asian session closed at about 5 o'clock at night with these Asian lows, which we can mark out as our sweep point. So my following trade plan that I was busy discussing on stream with my members at the time was to look for the Asian liquidity sweep into this demand, have that displacement fair value gap to then continue long to target those overall M15 week highs. Okay, and this is how price played out on stream with the members. So we had price just forming more liquidity for this demand zone. I wasn't interested in any price action over here. I wanted to see price sweep the Asian lows before looking to get involved. All right, so this little gray box over here was Frankfurt session, which is the Frankfurt session that happens from 7 till 8 o'clock AM GMT plus 2. We had a sweep of Frankfurt to continue short, which was a 100% valid opportunity for shorts to target this demand area. Price then swept Asian liquidity. My entry confirmation on stream was just an immediate displacement with a fair value gap. Okay, we had that mitigation. All right, over here we had that displacement. We then formed this fair value gap after this candle closed. I marked out this fair value gap, took immediate limit order on that gap, stop below that low, and I targeted the M15 week highs. If you really wanted to go for the long runner, you could have also targeted those older 4-hour week highs for a 48 risk to reward. Okay, and this is how that trade played out. So we tapped in pretty much on the next candle. Limit was activated and we were in this trade. To give you an idea of my risk management, I risked 0.1% on this trade for a total of 2.6% return. Alright, as we let this trade play out, after this break of structure to the upside, I set break-even stop loss. And this is how the trade played out through the day. Okay, simple structure. Even on the 1 minute, break of structure, pullback into demand or fair value gaps. Break of structure, pullback into demand to continue long. Okay. All right. Those breaks of structures, pullbacks, breaks of structures, pullbacks, breaks of structures, pullbacks, breaks of structures, slight pullback, breaks of structures, a larger pullback into demand to continue long, following the order flow of the higher time frame. Over here, we mitigated older M15 supply to cater for a larger M15 swing pullback. So still understanding structure and order flow, we need to mitigate most likely the discount of this entire range, which we just mitigated. And then we created that internal break of structure to the upside. At this internal break, we were due for a bit of a pullback to continue targeting those M15 week highs. that pullback into the discount of that range, and we targeted the M15 week highs for a full 27 risk to reward. So what I'm trying to get to over here is the supply and demand zones with the Asian liquidity. This indicator is called FXN, Asia Session Range, by Rob Minty. I recommend you highlight this or leave it a star, and it highlights the Asian Session Range. The Asian session time, you might just need to adjust. The indicator is automatically set to EST, so you will need to convert your time zone. You can go over to Google, and let's say, for example, you're in New York and your time zone is GMT -4. You can search GMT -4 to EST conversion, and the Asian session range on EST is 2 o'clock till 6 o'clock, and you will need to do that conversion to GMT +4, or whichever time frame you're at. Okay, and you can do the same thing for London and New York. I've got a second indicator over here where I've marked out the Chicago session, which I like to look at in New York session. So if there's any supply or demand zone with the Chicago liquidity, that is also a really good probability zone, which we'll cover a little bit later in the same video. And that Chicago session is from 16, which is 4 p.m., to 17, which is 5 p.m. EST time. So you'll need to do that conversion to your time frame or your time zone again. Okay, so to break down this trade, this entire trade was a complete understanding all the way from the daily to the 1 minute. So from the daily, we understand price needs to continue with a bit of a daily bullish pullback. Understanding the 4 hour. The 4 hour is bullish, catering for that daily pullback. The M15 switched bullish, especially after these internal breaks to the upside. Those pullbacks into demand. Break of structure, pullbacks into demand. The M15 shifted bullish to then confirm the 4 hour high, and the M15 week highs are now going to get targeted, catering for that overall daily pullback. And then on the 1 minute, looking for confirmation to get involved in that higher time frame order flow, is we had beautiful Asian session liquidity above that demand zone. We wanted to see the sweep of that displacement fair value gap entry to then continue riding that higher time frame intention. Okay, so hopefully you guys have a better understanding of how important it is to really have an understanding of your higher time frame intentions before just trading the Asian liquidity system. Okay, so let's go over a second example. What I'm going to do is I'm just quickly going to delete, I want to leave that there because I document all of my trades in a journal. I want to go over this morning's trade on the opportunity that we had for shorts, which is currently actually playing out beautifully. Again, let me just, there we go. There we go. Alrighty, let me just leave that there. That was set at BE. Okay, so I'm just going to quickly cancel that replay and let's go over this morning. So again, if we come over to the 4 hour, we've now had that 4 hour week high, which was over here, break structure to the upside, and that week high was targeted as per the order flow expectation. We then mitigated areas of daily supply. Older daily supply, which was good example, which was a good opportunity for shorts. I'm going to break this down now, which was a good opportunity to go short, understanding that price is due for a pullback. So over here, if we bring back the replay tool, I'll come back to Asian session. So this was a trade I also took. Okay, from the 15 minutes, we formed Asian session liquidity. It's now getting to about 7:30 in the morning, which is the time that I hop onto the charts. I immediately came over to the 1 minute and I wanted to see my trade plan sweep these Asian highs and look for that fair value gap displacement entry. Understanding again the higher time frame intentions. Price is due for that 4 hour swing pullback, so we can expect the higher time frame to start going short, which then from there we can react to our models on the lower time frames. All right, so let's let this play out. This is what I was looking for. So this was coming up to 7:30. All of this for me was just liquidity, wasn't looking to get involved. Still not looking to get involved. And immediately after Asian session swept over here, I looked for the first displacement fair value gap, which formed over here. Okay, so we had that sweep of Asian session, this displacement fair value gap. I took my first entry on this gap, stop above that high, and I was really just targeting these M15 internal week lows. You could have rode price to target the Asian session lows as well. But my final target was just a 1 till 5 for a 1% risk, which was a 5% return. Okay, so we'll just let that be as per my trade plan, but it would have been 100% valid to target those Asian lows because price is due for that 4-hour pullback. And we can determine that by hopping over to the 4-hour, and you can mark out your 4-hour range. The expectation is to mitigate discount of that 4-hour range. Okay, so back onto the 1 minute. We then tapped in. We were tapped in and immediately tapped out. And what I did again was this displacement, fair value gap. I took second entry on this fair value gap over here. I put my stop at about 4 pips just to cover a bit of that large candle. And on this trade, I targeted the Asian low simply because the risk to reward to the fractal low was just the 1 to 1.7. For me, that was not sufficient enough. And this is how that trade played out. Okay, we pretty much hit TP straight away, understanding again that price is due for that 4-hour pullback. Price is now swept Asian session liquidity deeper into the higher time frame supply to continue short, catering for that higher time frame pullback. All right, let's go over example number 3 and what played out this morning, and also the trade plan that I discussed with my community members. Same thing on the 4-hour time frame. Price is busy in that 4-hour pullback, so I really just wanted to see a continuation of this. There's also the good possibility that price can now continue to target the overall daily week low, simply because we've had mitigation of daily supply. We've had a very sharp bearish momentum push. The M15 also switched bearish, which gave good confirmation that the 4-hour pullback is still going to continue. If price takes out this M15 strong low, which is what I would like to see going into the rest of the week, to then ultimately will be good confirmation for a bit of a M15 pullback to continue targeting those overall daily week lows. All right, this is a no longer 4-hour week, that's still our 4-hour strong low. So on the M15 time frame, we had valid areas of supply that also failed these areas of demand. So this was a valid M15 supply zone with the inefficient push, the break of structure to the downside, and also was a flip zone because this was the supply that failed the previous high probability demand. So there was good possibility that price can pull back into the supply to continue short and target these M15 week lows, as the M15 has now shifted bearish. Okay, so what I was looking for going into session, exact same model. I wanted to see a sweep of those Asian highs, the mitigation into that M15 supply to continue short as my confirmation. All right, so this morning we had Asian session close at 5 o'clock, which I marked out this in a box for you. The indicator also marks it out for you. You can see these highs over here. We swept Asian session at about 20 past 5. However, I was still asleep. Most of us would have been asleep. And when I woke up this morning at about 7 o'clock to do my markup, we eventually mitigated that supply zone. I missed this move because this happened very early at about 10 to 7. So what I was looking for on the M15 time frame was an M15 fractal break of structure to the downside. All right. Fractal low that took out this previous fractal high. So that was our strong protected low. Price broke structure to the downside, mark out that supply that created that fractal break of structure, or M15 change of character with the inefficient push liquidity buildup. So on the 1 minute, I was looking for a continuation entry off of the M15 chalk supply zone after the mitigation into the higher time frame M15 supply and the sweep of the Asian session. So we had a sweep of this inducement and liquidity into that M15 chalk, immediately just waited for the first displacement, fair value gap. So we had mitigation. We then had this displacement and fair value gap. So I put limit on that FEG, and I was targeting these areas of demand initially, but I was not happy with the risk to reward, so I moved my TP to the Asia lows over here, targeting the Asia lows. We then had mitigation into that FEG, and we really just continued bearish from there. Okay. Failed this demand as well. Supply still in control over here. This is another example of a Asian liquidity sweep system, but with the understanding of the higher time frame intentions, where the daily's at, are we in the pullback phase, are we counter trend, pro trend, the 4-hour structure, which is our daily internal, and then the M15, which is the 4-hour internal, and our 1 minute for our entry confirmations, which I use the Asian liquidity system as my favorite entry confirmation in a supply or demand zone. Okay, so on the M15 time frame, to break down the overall higher time frame intentions, daily pullback has now started after that daily break of structure to the downside. We then had that 4-hour break of structure to the upside, which indicated this is now the start of the daily pullback. We had that 4-hour pullback into demand to continue targeting those 4-hour week highs. Understanding that all of this is just the daily pullback, we've now had mitigation into daily supply. So the possibility of price switching bearish on the M15 and the H4 is good to continue targeting these daily week lows, which is why hence this morning, ideally we want to look for shorts following the M15 structural story and context, which is exactly what ended up playing out. All right, guys, so just to recap that, any supply or demand zone that you want to mark out, for example, let's take, silly example, this demand zone over here, okay? Let's say price really continues bearish today, and by tomorrow morning, we form Asian lows as liquidity above this demand. This makes this demand zone really highly valuable and a good probability of either continuing to target those 4-hour week highs, or at least even cater just for a bit of a pullback before continuing short, which is something we'll worry about later on. As I always like to say to my members, learn how to react instead of predict. Okay, so let's continue with this example. Asian lows, the probability of this demand, if price sweeps those Asian lows, prints that displacement fair value gap to go long, would be 100% high probability valid trade plan going into session tomorrow morning. What could also happen is, let's say price continues a bit bearish today. We have these demand failures and breaks of structures to the downside. We have supply and control, let's say over here, which is actually a valid supply zone. And tomorrow morning, as price pulls back to the supply, we create Asian session liquidity, Asian highs. We have a sweep of those Asian highs into the supply. We have that displacement fair value gap. This would also be 100% valid trade plan to go short tomorrow morning. But again, we will let price play out and react from there. We don't need to stress about predicting this. We don't need to let our emotions get involved. We have that higher time frame understanding and contextual understanding of the markets, which will always keep you and I on the right side of the market, which is ultimately why I'm creating this course, why I've created MMFunded, is to help traders see where the money lies in the markets, where order flow and the expectation of order flow is going to go, to ultimately educate you to become your own independent, consistent, and profitable trader. All right, guys, with that being said, if you have any questions about the Asian liquidity session sweep model into higher time frame POIs, please do send me a message on Instagram. If you would like full access to the structural methodology that I teach to my private members, I will leave a link down below to that Discord community. The price of the Discord is basically the same as a premium Netflix subscription. You will also have 24/7 chat support with me through the chat channels. I respond to everyone, especially if you tag me, so make sure to tag me in messages in the Discord if you're in the Discord already, or if you're looking to become a new MMFunded member. Please make sure to tag me in every single message that you post so that I do get the notification and can respond to you. All right, guys. So I've also created a free 10-minute video on the page that I've left down below on the sign-up page for MMFunded that will go through everything inside of the Discord. That video is a little bit old now. I think it's a couple of months old. The Discord has developed a lot since then, so there is a lot more content in the Discord, which is also in the description of that page just above the sign-up button. So you guys can go to that link down below if you want to become an MMFunded member. Otherwise, continue to watch the bootcamp course that I'll be releasing over the course of the next couple of days, and you can backtest and always determine where you want to take that from there. But take care, guys, and I'll see you in the next ICT MMFunded Mentorship 2023 video tomorrow.